Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Wednesday, the 8th of June, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go through our usual regular run through in here today. We're going to take a look at the calendar, what we've got coming up. We'll take a look at some articles from the major news wires to see what's going on the geopolitical, a macro fundamental, a macroeconomic fundamental perspective. And then we'll take a look at the charts, see what's going on, where the potential is to make some profit today. Okay, calendar first of all. So we've had some fairly minor European data through the morning. German industrial production missed expectations. The Halifax Housing Price Index in the UK was slightly better than expected. Unemployment rate in Switzerland, as expected, pretty much bang on. And then if there's a headline, it is headline data, but the Q1 preliminary data in here, or the updated data in here for the Eurozone actually beat expectations. So we had an upgrade to that forecast of 0.3, came in at 0.6. On the quarter-on-quarter, and 5.4 versus 5.1 expected on the year-on-year. So doing better than expected. And there's an article in here. So Eurozone GDP growth speeds up in Q1 despite Ukraine war that the revised data show. So yeah, certainly a positive on that one in here from the Eurozone. But markets not really reacting in that way. So more of a slight negative in here going into this morning. Looking ahead to this afternoon, very light. The only thing we've got is the second lot of weekly data, the crude oil inventories data from Cushing. So we have that coming up. There is a 10-year note auction as well this afternoon in the US. So 10:30 for the data in here, Eastern time for the oil data, and the 10-year note auction at 1 p.m. Eastern time. So watching out for those. Let's take a look at the macro fundamentals. 5 things you need to know to start your day. So despite that GDP data being positive for the Eurozone, World Bank slashed its global rates for the global economy. But no real significant market impact from that economic. So tech shares in here, rebound in here. So we did sort of start the day off on a positive note in Asia. Chinese tech shares in here, certainly more positive in here. And the Chinese authorities approving 60 new video games, signaling a further easing of the crackdown of that tech sector. So that's seen as a positive in here, and markets are moving significantly higher. In fact, the Hang Seng Tech Index gained more than 9% in 3 sessions. So that's a big rally in here. Ukraine is working with partners to establish a humanitarian corridor for grain shipments. So that's going to be a positive, obviously, for the world economy if we can get the shipping lanes opened in here, shipping grain in here. Excuse me. Excuse me, guys. Apologies for that. And that will be a positive, obviously taking off pressures, but that's probably a long way down the line in here before we get that going. But the Turkish government in here is certainly trying to broker that deal for the shipments of agricultural products. What else we've got? So futures slightly lower in here. And Europe and data wobbling slightly. Sorry, European markets wobbling slightly in here. So US futures do slip. It says on inflation angst. I don't know where they got that from. Dollar gains. The Treasury yields back at 3%. Is it on inflation angst before consumer price reading on Friday? I think this is just, I don't think that headline, whereas the inflation angst comes from overnight nowhere. So it's not on. They're just fitting the price action or fitting a headline to the price action in here. And then overnight, obviously, from yesterday, Wall Street jumps with tech, energy, target news, weighs on retailers. So despite the market down, as we spoke about yesterday on the target news, the market did rebound in the session in here through yesterday, although they have slipped back lower. Future slip as tech-driven rally that we saw yesterday loses steam. So we've got that tech rally in here. And then again, European shares slip as Credit Suisse drags banks lower. So a profit warning from Credit Suisse also weighing on European banks in here today. So if we go and take a look, let's have a look at the European indices first. In here, we'll see not drastically lower in here. They had a healthy day yesterday, down about 0.5% across the board. French, German, UK indices about 0.5% lower in here going into before the US Open. And if we take a look at what the US, so it was a healthy rebound yesterday. Dow was up 0.8, Nasdaq and S&P also posting gains, and we've had a slight dip. And if you look at the Nasdaq's only down, given the tech saw a decent rebound yesterday. The Nasdaq, having early weakness and then rebounding, and Nasdaq's only down like a tenth. We've got about 0.35, a third basically low on the Dow, and about 0.25% low on the S&P. So it's hardly a big sell-off in it. It's just a slight dip that we've seen in here this morning or overnight on the on the US futures on the back of a little bit of European weakness, with Asia actually posting a solid day. And if you look at the charts in here, Nasdaq's kind of been leading things a little bit in here. So we spoke about this yesterday. We undercut the lows. We said we could run some stops down through those lows in here when we spoke yesterday on the call in here. And if we go back and look where we were on the call yesterday, so where were we in here? I've got to look at it on my time. So it's just after, it's like 12:30 my time, near lunchtime. So if I wind back to yesterday, where were we? In here, right? So yeah, we were sitting right on this low. Remember, we just held this low, and we did talk about flushing out below. So there, where are we? There, bang there, right? That's where we were. We were sitting. We just undercut that low, and I did say, there's potential for another undercut, maybe because we only just undercut at that point by like 3 points, I think it was, right? So the low was down at 1442.5, and this low was actually that low there, 1442.5. Where had we got down to? I think we just undercut, right? The low there. 12,425. Let me just get this right in here. I think we just undercut when we were on the call before. We just undercut this low in here, but not probably enough to trigger the stops. But then we went on, in the next hour, it did undercut. And then look, boom, we said, that was a potential buy opportunity. If it went below, run the stops and didn't progress, then that was potentially the buy opportunity. And boom, significantly back higher in here. So it was a solid day. And look, you can't say that this is a negative going into today. Yeah, we're down very, very slightly on the day, but this is what I would class as a high level consolidation. If we just look at it in the context of yesterday's price action, just got to look at a Fibonacci retracement of just the rally from yesterday. So that is just yesterday's price action. And you can see, yes, we dipped below the 23.6%, but we're holding way above the 38.2%. So that leaves this rebound intact. This is what I would class as a high level consolidation. And you can see, if anything, we're pushing back higher. And if you look at the overnight activity, is like consolidation activity. So you've got this impulsive, almost like a flag pattern in here. You've got this flag, you've got the flag pole from yesterday's, impulsive price action in here that we got after this was after the cash market open. So we did undercut that low. We mentioned that, undercut the low, run the stops, and then boom, 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 up back higher, dipped and rebounded into the close. So it's a healthy close yesterday evening, and we closed pretty much on the high. That's why we're down today. This is the close around here, right? So that's why we're down, because we basically closed bang on the highs, and then we just drifted out there. I would say this is some kind of a flag formation. Here's the flag pole, and then is of consolidation, which you often get on overnight activity. So it's not as relevant as when you get it not in overnight activity. But then if you look at here, you've broken out, wherever you want to draw this, the only place you're going to say we need to overcome now as resistance is you're going to have to take out the high up here. So that high, that's not meant to be a trend line of any sort. That's just showing you where the high is. But the high there, the overnight high from yesterday's high is so 12,710.5 on the Nasdaq. So the next real trigger is up through there. We just triggered up through the morning. This is like the morning high in here. So we've just triggered up through there in the last half an hour, and then up through there. So for me, this is setting up bullish again. It's a really strong day. And if we go back to yesterday's day, it's like a hammer pattern. Now, hammer pattern's not as relevant in here when it's in a consolidation. We're sideways, but nevertheless, the fact that it went just undercut the previous low from last week and then solid rebound in here tells me all the threat is higher, and I can easily see us back up to the highest. Now, going back to the 15-minute charts, I'm not being precious about this, but I don't want to get short until probably it undercuts the low, the overnight low. Now, the overnight low is 12,624.25. If you want to get in before that, then you're looking at this little uptrend line on the kind of consolidation. If it cuts down through there, you may get short. It may want to get short over this more below this recent low in here from the last hour. That's at 12,652. But for me, I wouldn't enter until we got through here, and then that could open up a significant correction. But for now, all the significant data that's going to impact this market. Oil inventory data shouldn't really impact it. So really waiting for the cash market open. But if we take out this peak here, I'd be happy going long on that one. Let's take a look at the S&P. It's going to be a similar story, but focusing on there on the Dow, because the S&P is really dictating price action. If you look in here, we're actually on the S&P. So this day we had in here this rebound day from this was from the 2nd of June. Okay, so from last week, this rebound, the market's effectively been caught inside the range. So we've basically been in here, 1, 2, is that a full day? Yeah, that was a full day, right? So this is Wednesday, Tuesday, yeah. So that was Friday, Monday. So basically that's Thursday, last Thursday. Friday, Monday, Tuesday so far. We're not quite inside day because we did just pop higher here back last Friday. And then we saw the sell-off on the payroll data. But effectively we're caught in that range. That range in there from last Thursday. High low there is 41.79 down to 40.72 and a quarter. So just over 100 index points there. We've been caught in that range. And again, this is kind of a hammer pattern from yesterday, but again, when it's in a range, it's not as important. And we didn't undercut the low, importantly here. We didn't undercut those lows in here. So we didn't run the stops on the downside, but the market came back strongly. So again, in here, it looks positive to me. Again, we spoke about this trend line in here. You didn't undercut the low. There's the low from last week. We didn't undercut that, held above that, and then rallied, similar rally. And again, if we go in, not quite as positive in here, you can see, as we are on the NASDAQ, not so quite positive on the broader market. Still, and I say the broader market down more in here than, and you've got this kind of topping line that comes across. Let me just do this properly, just extend it out as a ray. In here, oh, we've actually cut through that already. So we're just cutting through that now, right on this bar. And here's a 15-minute bar. This one has been, yes, it's been so it's coming from on the hour, so on the half hour. So we got 3 minutes till this one. We're going to get those on the 15-minute bar. Also really close to this little overnight high. Might even eclipse that 41.51.75, 41.52. Yeah, so we've just nudged above there. If we close above this, like this counter trend line in here on this 15-minute bar, I'm convinced that that's enough. We've also, as I say, we've just got above there by a quarter point in here. We've just nicked above that peak there, and we're pushing through it right now. So yeah, for me, all the threat is to the upside in here. So yeah, and looking for back to these highs, and then potential bullish, obviously bullish extension back up towards here, back up to that kind of 41.85, 41.90 kind of area, and maybe back up to the peak over here at 4200. So real upside threat in here today, looking for maybe 50 index points to the top side, and say I think you've had the buy opportunity. This was the buy opportunity here on this swing back higher. So for me, I'd probably be pulling the trigger now. I think you've got the confirmation that you need, or waiting for the next trigger, which is all the way here into the US equity market, cash equity market open. Let's switch across and take a look at the commodity markets. So I'm going to kick off with oil. So there has been this dislocation really with oil and stocks. We did have this inverse correlation. Now, stocks, you look at this part of the chart. This is looking like it's a positive correlation. So dipping a rebound yesterday and a push back higher in here today. And we've made another new high contract high in here for this contract, which is we're on the July contract, and looking very positive. You can't say much more about that than it's positive, right? It's just made a new high in the last hour or so, dipping back lower. This is the buy opportunity, and you'd be zooming right in now. I'd even come in further to like a 5-minute chart in here now. You've got this little counter trend, this tiny little downtrend from the last hour or so. This comes back from about an hour and a half, about 90 minutes. This little downtrend, I'd be looking for a poke above. Let me just redraw to get that right onto the peak properly. One sec. Why is that not working? Oh, there we go. Let me get this and put this properly onto the peak. There we go. Yeah, so we're right on it right now. So any kind of a next impulsive move to the upside, going with that one really on oil. Probably waiting for a push back above like 120. Really through like 120, 80, 85 kind of area on oil, looking for the next up leg in here for oil. And let's take a look at gold daily chart first of all. Still very much caught within this range. For me, still got this underlying positive bias. dipped and rebound yesterday, defended last week's low in here. Similar as we've mentioned before, there is a positive correlation with the stock indices in here at the moment, kind of slightly dislocated. Obviously, we're a long way from the highs in here. Obviously, the Nasdaq and the S&P are much closer to these peaks up here, the equivalent peaks. So a slight dislocation. Is it got some catch up to play? Let's take a look on the 15-minute chart. How we looking? So very, very sideways. We've had this obviously setback in here, hasn't had the same rebound, very sideways in here, but looking to break to the top side now. So you've got a string of peaks in here. Okay, this one here, the more latest one is 1853.5. Have we taken that one out? Yeah, we just nudged above that 53.7, 53.5, and this one they're probably waiting for the break of that one there now, and that's up at 1853.8. So up through 1853.8 in here would be the next bull signal. Quickly up to this peak here, which is 1858.2, and then potentially up towards this peak in here, 1861.2. So looking for maybe 10 plus bucks in here on gold on the next break higher up through 1853.8. Okay, guys, I'm going to wrap it up there. By the way, guys, if you do want to fire in any questions, if you do want anything covered, please do email in, send it to steve@tradeday.com or support@tradeday, whatever you want to do, subscribe or support@tradeday. Send us an email if you want anything covered on the webinars, anything you like about them, anything you don't like about them. Give us some feedback and we can be reactive and add more in. If there's markets you trade that we're not covering, we do obviously see what you guys are trading. So we try to cover what the majority, we can't cover everything, but there's something that but you particularly want, or if you want me to explore an indicator or something, I don't know, whatever it might be. And there's obviously a live chat in here. We rarely get anyone participate in the live chat. If you do want to stick anything in the live chat, if you are on live, then you can stick a message in on the live chat, which is just below where the video plays. And then I'm happy to ask questions in real time. So yeah, or fire them in on an email and we can try and cover stuff for you. Okay. All right, guys, I'm going to wish you all a great trading day. Stay safe out there, and I'll be back with you with another Bull versus Bear webinar tomorrow.